So when it comes to investing in the stock market, I want to say I'm new to it. I don't want to sit here and tell you I'm a genius to it. Matter of fact, you can call me an average investor. But what separates me from so many investors out there is the willing to learn what I don't know and get better at it. So if you want to begin your investing journey in the stock market but feel like you are not an expert, just like me, in this video I'm going to give you my 9 steps of investing in the stock market. But before we jump into the video, I want to say thank you to those of you who have subscribed to this channel. And for those of you who have not yet subscribed, please don't forget to subscribe by hitting the red button below. It will only take a few seconds of your precious time, but it will mean a lot to this channel. So our first step, you need to determine your goals. Now, before you get into investing of any kind, you just have to make sure that your overall financial situation is in a position to accommodate the new activities. Now, this is going to include everything from income to debt to your household budget. So when determining your goals, you should take a specific consideration to the following. The first thing you have to look into is your employment. You have to make sure that both your job and your income are secure enough to allow you to begin investing. The other thing you have to look at is debt. Because if you have a significant amount of outstanding credit, you may want to pay some of your debt down before you begin investing. You should never invest money you can't afford to lose, and that's the position you'll be in if you have too much debt. The other thing you have to look into is a family situation. Because if you just welcome the baby into this world, you need all of your available income to help with the new arrival. Family situation should be stable before you begin investing. The other thing you have to look at is your household budget. You should have some room in your budget to direct cash into your investing ventures. Now, investing in stocks makes most sense for the longer term that you invest in. You generally don't want to invest money that you need in fewer than 5 years, as there is a risk of losing that money in a downturn. So step number 2, you need to put some money to the side. Now, save money before you put any of your money at risk. A cash reserve equals to at least 3 months of your living expenses should be the minimum, and it should sit in nothing riskier than certificate of deposit, what we call CDs, or money market accounts, or even your ordinary savings account. Now, the purpose of your cash reserve is to act as an emergency fund in an event of a temporary income disruption, or you getting sick, or other financial emergencies. Now, this is going to give you that peace of mind that you and your family are taken care of in case of an emergency, which is going to happen. Just take for instance, last year when the pandemic happened. Step number 3, you need to open a retirement account. Now, you need to invest for retirement once you have a well-stocked emergency fund set up. Now, the best place to begin investing is in a retirement account, and this can be your 401k plan through your employer, or an individual retirement account if there is no employer plan. Retirement accounts are an excellent start because they represent long-term investing. And one of the best aspects of a retirement account is that you can build up money in the plan without actually investing it until you are ready to include stocks or bonds into your plan, or when you feel comfortable, you know. Step number 4, you need to start investing with an online service. So once you have a retirement account up and running, it's time to start investing for your non-retirement investing needs. Now, finding an online discount stockbroker can be a confusing and complex decision at the beginning. So to narrow your decision, it comes down to asking yourself the following questions. Now, the first question you have to ask yourself is, does that broker ideals match my investment strategy? Number 2, what are the broker's trading fees? Number 3, does the brokerage offer banking services? Then number 4, does that broker offer investment advisory services? Number 5, does the broker offer any research tools? And number 6, what can I invest in this? Broker? And then number 7, what type of customer service options do they offer? Now you're going to find that when you ask yourself such questions, you are going to narrow down the type of brokerage that works for you best, and that's going to give you the full returns when you start your investing journey. Now, step number 5, you need to begin with mutual funds or exchange traded funds, which we call ETFs. Now, when you begin investing, you'll be far better off with mutual funds or ETFs than plunging right into stocks. Now, funds are professionally managed, and this will remove the burden of stock selection from your plate. All you need to do is open an account with one of the many commission-free ETF trading apps available. Now, you need to determine how much money you want to put into a given fund or a group of funds, and then you are free to get on with the rest of your life. Now, one of the advantages of mutual funds is that you also don't have to worry about diversification. Since each fund holds a numerous number of stocks, diversification will already be built into these funds. Step number 6, you need to take advantages of dollar cost averaging. Now, dollar cost averaging is the process of buying into your investment position gradually rather than all at once. For example, rather than investing $5,000 in a single index fund, you can make a periodic contributions of let's say $100 per month into the fund. Now, by doing this, you remove the possibility of buying at the top of the market. Instead, you are buying into the fund at all different levels. And what you're going to find is that this is going to eliminate the when question, as in when can I invest into the stock market? Now, even better for you, dollar cost averaging works beautifully with payroll contributions from your job, and it is a natural fit with mutual funds and ETFs. Step number 7, you need to get some investment education. Now, this is very, very important. This should have been my step number 3, because with the intention that you have some understanding of investing before doing anything at all. Now, fortunately, mutual funds and ETFs, with the help of index funds and dollar cost averaging, removes the necessity. You can begin investing immediately, and even if you are new to investing. But if you want to move beyond funds, payroll contributions, and dollar cost averaging, and into holding individual stocks, you're going to need to learn all that you can about investing before you do. Right? Because like I told you, there's a risk of losing money. And to become a good investor, you need to surround yourself with investment experts and learn all that you can. Now, the idea is to become fluent in investing before you begin investing with real money. The more you know before you begin investing, the lower the amount of risk you'll be taking on. Step number 8, you need to invest in individual stocks gradually. Now, before you finally feel comfortable enough to begin investing in stocks, be sure that you do it gradually. Since you already have significant positions in mutual funds and ETFs, you can begin investing in stocks one at a time as you work towards building a portfolio. Now, the fund positions should prevent overexposure to a single stock. Now, as long as you make sure that your position in that stock represents only a portion of your total portfolio. You should never overload in a single stock. And when you are starting out, take a minimal position in one stock, generally 100 shares to take advantage of the best pricing, and then you can move into another stock. You can repeat the same process until you have several positions in this stock under your portfolio, in addition to your mutual funds and ETFs. Step number 9, which is our last step, is do not forget to diversify. This is as important as the education point. Now that you have built your mutual fund and ETFs, the stock portfolio, you have set up a retirement plan, now you are heading into the right direction. But while you are building your portfolio, you also need to spread your capital out among various equity sectors. For example, depending on your age and risk tolerance, you may want to have some of your portfolio invested in bonds, growth, income funds, and international funds as well. well. You may also want to consider high dividend stocks among your individual stocks. Income earning securities tend to be less volatile than pure growth stocks, particularly in bear markets. You also want to develop a balance between your growth assets and your income or growth and income holdings. Now, before I close out this video, you may need to ask yourself a question. Why should I start investing now? Now, numbers don't lie, and the truth of the matter is, the earlier you start investing, the better off you are or likely to be. Now, the longer you keep your money invested, the more time it has to grow. Earlier investors have a better chance of seeing a more significant return than those who start when they are a little bit older. Now, personally, these are the steps that I used at the beginning of my investing journey. And like I said, I'm new to investing. And they gave me a good foundation when it came to investing in the stock market. One important point I want you guys to remember that investing is a process, not a destination. So you need to be learning and experimenting on an ongoing basis. Do not stop to educate yourself. Continue watching videos, continue reading books so you can learn more and more when it comes to investing. So on that note, I want to say thanks for watching to the end. Please do not forget to like the video and subscribe by hitting the red button. Like I said, it's going to mean a lot. It will take you just 1 second, and this is going to enable you to not miss any of my videos when I post them weekly. And also it's going to help you to join the journey of everyday investors who are trying to achieve financial freedom. Thank you. See you next time.